very distinguished panel, and they'll be guiding us through a topic, which is how to leverage diaspora capital for African high growth companies. And when we talk about diaspora capital, we shall be focusing on people within the diaspora who have some link or any connection to an African country and would be interested in using that capital available to them to provide investment and any other kind of financing to African startups. So on the panel today, I have Larry Yahn. Larry is working with B&C International, which is a global investment firm, and he can better introduce himself. So I'll give the floor to Larry for now to tell us a bit about himself before we can move on to know more about Samuel. Larry.
Good afternoon or morning or evening, wherever you are across the world. Thank you, Irene, for that introduction, and thank you, Vitalex, for organizing this conversation. As Irene mentioned, my name is Larry Yahn. I am a senior partner and COO of B&C International, headquartered in High Point, North Carolina. We are the oldest Black-owned global strategy consulting firm in the U.S. We've been in business for about 58 years now. About 40 plus of those years, we've been socially and economically engaging on the continent of Africa. Kind of domestically here in the U.S., our founder and CEO, Dr. Robert Brown, was very instrumental here in the U.S., executing the executive orders under then President Richard Nixon that established the Minority Business Enterprise Program here in the U.S., today known as the Minority Business Development Agency under the U.S. Department of Commerce. And internationally, through our kind of nonprofit arm, we have shipped about 5 million books to the continent of Africa, opened over 200 libraries, sent countless containers of socks and school supplies. And on the for-profit side, we kind of have been focusing on working with U.S. corporations, small businesses, and kind of high net worth individuals here that were looking to have a better presence on the continent of Africa. And conversely, on the continent of Africa, we work with small businesses there, along with governments and government organizations that have kind of economic development mandates, and we help them develop kind of international expansion campaigns here specifically to the U.S. So I am very happy to have this conversation. This is something that as a firm and me personally, we're very, very passionate about. We've been kind of Afro-optimists for a very long time now, and we are happy for a number of reasons to have discussions where we have the opportunity to encourage a deeper connection between Africa and its diaspora. So thank you, Irene, for moderating this conversation. And again, thank you, Vitalex, for organizing and giving us the opportunity to discuss this.
Thank you so much, Larry, for that introduction. We'll be hearing from Samuel now. He'll tell us a bit about himself, and he's a man he comes with many talents. I know he's involved in biotech. I know he has a bit of corporate finance. He's currently corporate finance with Gilead Sciences, but I'll let him talk about himself a bit more before we get into the discussion for today.
Yeah, thank you. It's a real pleasure to be here, and thanks Raymond and the team at Vitalex, Raymond, Irene, and the team at Vitalex for putting this together. These are always exciting conversations to have, and just a chance to really exchange thoughts and ideas. So I'm really thrilled to be here. And to my co-panelist, Larry, congratulations on the really exciting work that you're doing, both within the Black community in the US, but also really in this case with the focus on diaspora investing. So that's really exciting. A bit about myself. So I think I'll kind of bifurcate that into two. What brings me here today, and then just my professional background. So professionally, my background is in drug discovery. When I graduated college, I spent 4 years at Dana-Farber at Harvard Medical School and the Broad Institute at MIT. And my work there was primarily around doing early stage discovery within academic settings, and I worked on childhood cancers. So I was a research scientist. Then I left that world and joined the world of business. I went to Yale for business school, and what excited me there and in relation to my work here to being on the panel today was that during my time at Yale, I worked for the SCI Center for Innovative Thinking, which is an internal startup accelerator at Yale focused on very early stage ventures. And so started to really get very interested in how do people get ventures off the ground. And so working with a lot of exciting undergraduates and graduate students at Yale to figure out ideating and kind of getting their startups off the ground. And also with regard to that, during my time at Yale, I founded the Yale Africa Startup Review, which is hoping to have its first publication sometime next year. And really the focus of this was on highlighting the ingenuity and innovation that's going on the continent and being able to share those stories for the purpose of attracting interested stakeholders, both from within the continent and across the globe. And a huge focus of that is really being able to say that innovation on the continent goes beyond just Nigeria, South Africa, Egypt, and Kenya, but that there is a lot of exciting things everywhere. And so that's been an exciting journey for me. Built a team of about 6 other Yalees, and we continue to engage with investors on the ground and entrepreneurs. So that's been exciting. And professionally, I work with Gilead Sciences. It's a biotechnology company here in the Bay Area. I'm on their finance team. And it's officially 3 weeks in, so fairly new at Gilead. So really excited to be on the panel and looking forward to learning a lot from you and also sharing what I've learned. And it's a pleasure. Thank you.
Thank you so much, Samuel. I'd like to request everyone who's attending this webinar to please mute your microphone so that we would have a clearer, we could hear the presenters clearly. So as you join, okay, the people who are joining are not of remittances to support households. We're not looking at money coming from the diaspora to buy real estate and maybe set up something. And we also want to move away from that idea that people can only invest from the diaspora or internationally in ventures that are already established. But we want to see, is there a possibility or is there any interest coming from the diaspora, specifically people with a connection to Africa or having their origin in an African country? Would there be interest in them availing financing for startups within Africa? And that's really our first question. And I'd like to get a comment first from Larry on that interest. And would you say that there's an interest specifically from diasporas in making investments in startups in their countries of origin? And what would you say, if there's any such interest, what would you say are the key drivers for that interest? Over to you, Larry.
I think that's a good question to begin with. One that is, relatively simple and complex at the same time. From the on the surface side of that question, I think that based on the 400th year anniversary of 2019 being the 400th year anniversary of the first slave coming to the U.S., yes, there is a heightened interest in reconnecting with the continent in general, right? And that may be economic or motivated or just kind of socially and them wanting to have a reconnection to their heritage. advantage. Now, in terms of them investing in startups, I will say that, and there's the important part of your sentence I think was very interesting, as you said, question was startups in countries of their origin. I think that's where the challenging part comes in, because many of African Americans, particular aspect of the diasporas, don't necessarily know their country of origin.
Yeah.
Right now, unless you're an immigrant, right, and you from Africa, and you still have those familiar connections, then yes, that's an opportunity for African Americans to have to reach out and develop relationships with African immigrants, to be able to have that have some level of closer connection to the continent. Unfortunately, many of us as African Americans don't necessarily have that direct familiar connection. Now, I did some research for a policy paper that I co-authored last year, and what I found out and what I realized through looking at other cultures here in the U.S., for example, was that Chinese Americans do a considerable amount of business with China, and Mexican Americans do a considerable amount of business with Mexico. They're countries of origin, and it really kind of by an excessive amount kind of is over how much business African Americans in the diaspora does, not just with specific countries on the continent, but with the continent as a whole. So I look at that as an opportunity for and an example of the potential that if Africa's diaspora, if Africa is having a better kind of connection with its diasporas globally, that there's a major opportunity for investment, a major opportunity for collaboration and growth on both sides of the water.
Thank you so much for that insight, Larry. Samuel, would you like to jump in here and let us know your experience when you were with the Yale startup, and whether you could attest to the same?
Yeah, I mean, I think it is a great question, Irene. And can you hear me clearly?
Yes.
Great. No, I think that's a terrific question. I think the way I would approach and the way I would answer it, my experience around with the Yale, the SCI Center for Innovative Thinking at Yale, I think was more inward focused. The huge focus was really on startups within Yale and less global focused. But I will speak more to what we're finding over the course of speaking to investors, both locally, but also partners here with their startup review that I'm currently working on. And so when we think about, would we say that the diaspora is interested in investing in startups from their countries of origin? The answer is yes. I think the more complex question is really, what are the key motivations driving this interest? And I really think of it in 4 ways. So I think there are sort of 4 pillars to that. The first is really driving higher returns as an investor. That's something you think about. The second is thinking about uncontested markets within which you do have a better chance to compete. The third is really exposure to new frontiers. And then the third is kind of for people that work for corporates like myself, people that work in venture arms, a lot of it is really, in some ways, doing scouting. And so I'll expand on that a bit. The first point that I mentioned is really investing for higher returns. More and more, I think it's harder to squeeze strong returns out of markets in the US or in Europe, except for a handful of startups. And so when you're looking for alpha, when you're looking for those big returns, you're thinking towards emerging markets. And that's Latin America, Latin Africa, and parts of Southeast Asia. So that is a big driver, whether it's a pension fund that's investing in a VC that ultimately channels its capital to the continent, or whether it's a young VC that's trying to find its footing and realizing the space in the UK, the market in the US is very flooded with capital, and as such, the returns are being driven lower. So that's the return aspect, and I think it is a key driver. And for an investor, that is a main driver. The second is being able to work in markets that are relatively uncontested, where there is one or two competitors as opposed to 6 or 7, that you think that when you put in your capital, that could really make the difference for that particular startup and to allow it to really scale. And to expand on the third point around exposure to new frontiers, what we've observed is that historically, there's been a convergence among 4 main hubs: South Africa, Nigeria, Kenya, and Egypt. I think more than 80% of all, both just foreign direct investment, but also VC investment. It's hard to make a bifurcation between what's coming from diaspora Africans and African Americans and what's coming from. I don't think the funds make that separation. So speaking more generally on that, what we're seeing is more capital moving towards other hubs. And here, we're seeing Tanzania, Ethiopia, Senegal, Ghana. And so that shift, I think, has spread out capital more. And for many investors, it's an opportunity to be exposed to frontier markets within the continent. And then finally, around the corporate VC point, when you think of sort of consumer packaged good companies like Pepsi and Procter & Gamble and Unilever, one of the ways that they seek to enter markets in Africa is, whether it's through the employees who come from the continent, is really seeing what tiny startups are doing well, in what areas of CPG are they doing well, and then can you send your corporate VC arms to scout and see what's going on, whether it's by taking a small stake in it and seeing how they're doing and how they're scaling. So I think those are, the answer is yes, absolutely yes. And I think the motivations kind of vary across those 4 key areas: higher returns, new and uncontested markets, exposure to new frontiers, and then scouting for corporate VCs.
And maybe the next question is something that you've hinted on in your answer to the question before, why we see that difference in the inflows from the diaspora, and why there's been so much of the concentration in Egypt and Kenya and Nigeria. And could you maybe give us some insight into what the factors could be that are causing that variation that we see clearly?
Yeah, and I think Larry can probably expand on this too. I think, to your point, there was a bifurcation just towards just the big 4 of Egypt, Nigeria, Kenya, and South Africa. And I think there are really 3 major reasons, or 4. The first is just essentially that the bulk of the diaspora, at least in the United States, is from West Africa, is from Nigeria and Ghana. And so just from a social perspective and sort of connections and an understanding of the ecosystems, it's much easier to go where you know and where you understand. When you look at East Africa, the Kenyans are much more well-traveled than Ugandans. And so there's more Kenyans in the diaspora. It's same thing when you kind of look at Southern Africa. So that's one element. The second is really around slightly more mature ecosystems. I think those 4 areas really have much more mature ecosystems, and that's much more attractive. And then the third is around critical mass. I think in terms of invested capital, what you end up seeing is people go where others are going. And that's because it's easier to network. It's easier to bounce ideas off and say, hey, we're trying to drive a seed round in this startup. Have you guys heard of them? Are they legit? And then the fourth is just a global awareness. I'd say that, if you did a series of interviews and you ask people about what countries come to mind when they think about Africa, they'll probably pick out those 4. And if you bifurcate it by regions, if you say within East Africa, Kenya would come first, in West Africa, Nigeria would come first. So I think those are the 3 main drivers. In terms of, I think a more nuanced part to your question is the newer crop of countries that are starting to receive attention: Rwanda, Senegal, Ghana, Tanzania. I think what's driving that, at least in the case of Rwanda and Ghana, is a much more enabling environment for startups. The median time it takes to register a startup in Rwanda or Ghana or Senegal is significantly lower than the rest of the continent. So that makes it easier. and also much more enabling investor policy from the government. So when we think about, that question, I think those are really the key drivers there. Those are the reasons why we see a concentration of capital in those 4 areas, and why we're also starting to see more capital flow into other countries outside of those 4 countries.
Right.
Okay. Yes.
I would agree with all of those points, and Samuel is 100% correct in that regard. I think part of the reason that conversations like this are important is because it gives us an opportunity to grow those ecosystems and grow that knowledge base, right? Especially if you are in the U.S. and you don't have kind of the ability to be on the ground to create relationships whenever you want. Being able to be a part of ecosystems where there are trusted and proven experiences gives you a very big advantage. I think when you think about those markets of Nigeria and South Africa and others that are kind of further along in regards to global perception and reputation for being good markets, they did that in large part without the presence of the internet, right? And it took them quite a while to get to where they are. Now, when you think about some of those emerging geographies like Rwanda and Senegal and Uganda and others, they have an opportunity to do it a little bit different, right? Than those that came before them in this same conversation, and where they are making very good strides in terms of ease of doing business and startup time and resources and programs to motivate and entice foreign direct investment and participation. There are opportunities of improvement of leveraging the use of the internet to get out those stories and to let people know globally that they're open for business. And I think even South Africa and Kenya and Nigeria are still themselves figuring out how to leverage that powerful tool of getting out those good experiences that others have had and the opportunities and the markets for high growth. I think that you will, to Samuel's point in the previous question, there are many African diasporan businesses in the U.S. that are in very saturated markets, that are in very mature markets, that are still fighting to identify opportunities to compete even regionally. But the continent of Africa actually gives many of them the opportunity to almost skip a step and go global with the right ecosystem and the right relationships, because the opportunities are there. And we all have a responsibility of working together and having that information share and building those relationships that will allow them to do it when they aren't present all the time. So that's a very good question. I think the opportunity is something that we can definitely expound upon throughout this conversation, and even in our work with letting those good and bad experiences out, because sometimes the bad experiences for the diaspora actually ends up being very powerful, and it becomes perceived risk and not actual risk all the time. So that there's an opportunity to leverage media and relationships to continue this motivation and this interest in some of the lesser known geographies on the continent.
And I'll just stay with you, Larry, on that, on keeping the diaspora interested. What factors would you say can enhance that interest? Because we're looking at things like tax benefits. Are we seeing an increased interest in investing in Africa when there are some fiscal incentives to make an investment?
Absolutely. I think incentives are a great way not only to entice participation, but it's also a way for African countries to compete and be creative with how they can really show the value proposition and the advantages of their particular geography, right? Because you know, it is a very, very competitive market. When you think about if I'm, you know, in the U.S. and I have manufacturing relationships in China, and now I'm, you know, looking for other supply chains and other manufacturing hubs across the world. This is an opportunity for African countries to really put their best foot forward, so to speak, and provide what incentives and what aspects of their country and value propositions of their country that separates them from others. It's that marketplace that lets the world know actually how big Africa is, because there's, you know, unless you've traveled, and unfortunately there are a lot of aspects of Africa's diaspora that actually haven't traveled back to the continent still. They've been to the Caribbean, and they've been to Europe and you know, Italy and all of those, you know, great, you know, typical travel destinations of the world, but there are a lot of them that haven't been back to the continent. So there's a large kind of underestimation of actually how big it is, how massive of an opportunity it is, and where the opportunities are. So you know, to your point, incentives, whether they be tax incentives, whether they be in some of our engagements, I've seen, you know, the ability to provide property, the ability to provide, you know, capital for training and developing human capital on the continent are wonderful opportunities for African diaspora and businesses to feel comfortable coming back and really being able to feel confident in capturing that opportunity in those respective countries.
You've actually commented on something that I hadn't thought of before, but maybe part of the path to encouraging more investment would be to familiarize this, to get the people familiar with what they're investing in. Because if you've never taken a holiday in Africa, which may not be true for the immigrants since they've been in Africa before, but it could be more true for the African Americans. And maybe they would be more comfortable making an investment in Africa if they were aware of what is out there, and it's not some large jungle. Samuel, would you like to jump in here and say something on this particular question?
Yeah, absolutely. I think Lara has made a lot of terrific points and really strong commentary around that. I think from my perspective, the focus should be less on creating an enabling environment for investors and more so on creating an enabling environment from startups, first and foremost. I think that the capital will follow. And, you know, if you're, you know, by and large, either as a seed stage investor or either as an angel investor or, you know, a variety of the different early stages, seed stage or Series A, you're taking high risk. So you're looking for alpha, you're looking for outsized returns that you would not get by letting your money sit in a standard Fortune 500 company or just starting a business. So taxes are a very small component. And so to kind of think about that point a bit more, I'd reiterate that the focus should be more so on an enabling environment for startups. And I think here there are sort of 4 key areas that I think, since you mentioned tax benefits, I'm assuming what the government can do and the local private sector can do to create an enabling environment. So I think of sort of 4 key things. One is creating hubs and enabling facilities that allow entrepreneurs, to, one, just access free internet, interact with fellow entrepreneurs, and be able to ideate and work towards ideas. The second thing is around seed financing. And you want to think about seed financing less so from how much money it is or the fact that it is money, and more that the fact that it is de-risking the venture and making it easier for people who are less familiar to then come on board. And so by governments and local corporations on the continent taking a much more active role in seed financing startups, they can de-risk them and make them much more attractive to people who don't understand the space as well, or who don't spend every day, whether it's in Kampala or Lusaka. The third thing is around university tech transfer. A core component of ecosystems that have done well is they're typically associated with strong universities that encourage entrepreneurship, but also that allow students to be able to protect what they're working on, both students and their faculty. And then the fourth component that I think that both the government and local corporations in Uganda, in Tanzania, or in Zimbabwe can do is talent and upskilling. A key challenge that a lot of startups have is being able to access high quality talent. And so the thing what the government can do is really being able to upskill young people to position them to take up roles in startups. And that in itself makes the most successful young companies. And this can be through access to massive online courses from across the world. It can be through training. And equally important, it can be through engaging with their partners in the private sector to provide internships. So I think those four areas, creating more hubs, taking a more active role in seed financing, building up university tech transfer environments, and then really helping upskill talent, I think should be a key area of focus, and the capital could flow. From an investor perspective, I think there are really just two things. So one, obviously you want to go where the four things that I've mentioned are robust. But when you think about what the government can do for you, I think first is just local governance mechanisms that make it easy to do diligence on a startup. That's very helpful. And that's, I think, something that Rwanda has done well, and I think Ghana is doing really well. You don't want a corporation to have to register in Delaware. It'd be nice to be able to do diligence on it in Kampala, and that's the function of governance. And then the second is just reducing bureaucracies and blockages. If you're starting Safe Border and you're going to invest in Safe Border in Uganda, or Matatus or whatever, you want to make sure that the government will not wake up one day and say no safe borders in the city, or no safe borders in these zones, or that a major government contractor will say startups, the investors will follow. They will assess their own risk and follow suit.
Okay, I actually find that very, very interesting, because usually Africa is always thinking about creating some kind of tax incentive, some kind of investor incentive, but an enabling environment goes a long way in ensuring the startup itself survives, even if it doesn't secure that foreign investment. Okay, the next question is I think more is thinking about the immigrants. Is this impression that they're more willing to invest in their countries of origin because they have certain superior knowledge of how the country operates, what opportunities are available, the business practices, and they should be readier to invest in their countries of origin. Would you say this is true? Do they actually have this knowledge, or is it an assumption that they are making?
No, that's absolutely true. Just with any immigrant from any country across the world, right? They would have, more access to knowledge and governance and business practices because of those things than, say, an outside investor. Even if that outside investor has, endless resources for research and development, right? The immigrant has a deeper knowledge on some of those intangible things that would make a business successful, or intangible things that would help mitigate risk, or the relationships to know who you need to know, and things of that nature, right? So absolutely.